and the audio visual recording of the meeting together with the presentation and the meeting transcript will be uploaded on the website and also to the stock exchanges. I would like to brief you on some of the important points for the smooth conduct of this meeting. All of you have been kept on mute mode to avoid any disturbance arising from the background noise. During the question and answer session, names of those who have already registered with us will be called, and thereafter the respective speaker will be unmuted. Others who have any questions may raise their hand by clicking the raise hand option in the Microsoft Teams page, or if you wish, you can also put your question into the chat box and we will have that taken during the meeting. I also request all the speakers to be brief in their question and answers. Now I hand over to Mr. Alex Gerd to take it forward.
Thank you, Manohar, and very, very warm welcome also from my side to all the analysts and fund managers who joined us today. As every meeting, just some preliminary forward-looking cautionary statements. So we only discuss matters that are in the public domain, and we do not provide any forecasts or give guidance of future business results and outlook. We start every meeting with a safety moment, so I would also like to start here. As you know, every August we have our global safety weeks where we do awareness activities and trainings in all our sites. And here you see a picture of our Mangalore site. Now this translates also into our safety performance, and I'm very happy to share that we have had no high severity incident year to date as of October 2024. We also did not have any lost time injury this year. We did have, though, 2 process safety incidents, but there was no operator exposure, no environmental impact, and remedial measures have been immediately implemented. I'm also happy to share that we continue to focus strongly on the leading safety indicator, so near misses. So near miss reporting is gradually increasing, which is a good indicator that we have a very safe environment. So I want to congratulate here again all of our sites for this excellent safety track record, and our ambition obviously is to keep it. When we look at the macroeconomic situation in India, if you look on the left-hand side, it has not substantially changed. I mean, GDP growth continues to be very robust, between 6.5 and 7%. We do see a slightly high inflation. RBI interest rate remains for the time being at the same level. Purchasing Manager Index is very high and stays high, and also consumer confidence. So in a nutshell, the momentum India, when it comes to economic robustness and growth, remains there. If you look on the right-hand side into the different industries, automotive industry continues to show growth. I mean, IHS projection for passenger vehicles is around 4% in 2024. Post-election time, there was a little bit of a muted market. There was quite some retail inventory of passenger vehicles, but we see that is also now picking up again. Also, post-election construction momentum picked up again, but then we also had a prolonged monsoon with heavy rains, which also had an impact, especially if we look at the agricultural season. The pest pressure on the major market, which is the insecticide market, was lower, and there were less insecticide applications. When it comes to fast-moving consumer good food and non-food related items, I think the pharma segment, which is heavily dependent also on export sales, given the economic situation in other parts of the world, which is subdued, has certainly been impacted. But when we look at rural demand has been quite strong. Urban demand has been slightly muted. So it's sort of mixed picture on the FMCG side. We do see continued pressure in the chemical sector. So overcapacities that have been built over the years in China, with the slow economic recovery that we see in China, a lot of those products end up in exports, including also impacting India imports. So overall, I think a strong robustness of the economy. Growth momentum is there, slightly differentiated if you look at industry by industry. And with that, I hand over to Naren to walk us through our financials.
Thanks, Alex. Good afternoon, everyone. So let's see the financial performance of BASF India Limited. This is the April to September first half year. In BASF, we have 6 segments. Agrochemical is one segment, agricultural solutions, what we call. And then there are 5 other segments, each one having 2 operating divisions in them. So materials, industrial solutions, surface technology, nutrition and care, and chemicals. When you see the pie chart, out of the 8,200 crores, almost 1/3 is from our materials segment. And it covers both performance materials and monomers. And then the second biggest one is nutrition and care, which has 18% share, and closely followed by agricultural solutions, 17%, and then by industrial solutions and chemicals. So the takeaway from this slide is the well-diversified portfolio of BASF, where all the 6 segments of BASF Global exist in India, and we sell a significant amount in each of the segments. Coming to the financial performance, quarterly, this is what we released some time back. For the July-September quarter, the top line has grown by 15%. And of that, 12% is from volume growth and 3% is price increase. So very strong performance, both increasing the volume and price simultaneously is a difficult task. And the business units have done a great job in showing that pricing power by increasing the prices also when the volumes are going up. Of that 15%, around 300 crores is from the materials segment. So it has been a strong performance. Later also we see how materials is contributing to the overall growth. 300 crore is from additional sales from materials. This is additional I'm talking, over and above what we did in the 3 months of last year. This is additional 300 crores we have for this year from materials segment. Coming to profit before tax, before exceptional items, again 15% lower. I mean, compared to the 15% higher sales, unfortunately, the PBT is lower by 15%, mainly due to increased input cost of agro and also industrial solution segment. And we'll cover that in the later part. Coming to the 6 months results, half yearly from April to September, 16% growth, thereof 17% volume growth. For that 6 months, we have 17% volume growth, though there's some price pressure that Alex explained in the earlier slide. That's generally felt in the industry. But the volume growth of 17% has helped us show a 16% growth in sales. Again, here, around 600 crores is the additional contribution by materials division to the top line. This is additional again, what we did in last year, 6 months. Over and above that, another 600 crores has been added by materials segment. On the PBT, 29% increase. And June was an exceptionally good quarter for us. As compared to that, September is not that strong. But then again, together, almost 30% increase in PBT. And here again, materials has contributed around 100 crores additional PBT. So across the board, we can see both agro and materials department doing well on a 6-monthly basis. This chart shows the quarterly numbers for the last financial year 24, and 2 quarters of this financial year. The dark blue is last year, June 2023 to March 2024. And then the light blue is June and September 2024. Compared to the 3,700 crores we had sales in September 23, that has, like I said, has gone up by 15%. And for the first time, we have sales above 4,000 crores, so 4,248. Last year, it was around 3,300 crores, if you see the dark blue bars. And now we have 4,200 crores in September, after again a very strong June quarter. Together, the first half year, we have a 16% growth, like I said in the earlier slide. Coming on to the right side, PBT before exceptional item, 200 crores was our September 2023 PBT. And compared to that, there's a 15% reduction, like I showed in the earlier slide, 171 crores, impacted mainly by agro and industrial solutions. And June 2024 again was a very strong quarter with agro doing extremely well. Compared to that, a 40% decrease in PBT we have seen. At the same time, what is worth remembering is it's an agro, when it comes to agro season, it is generally spread between June and September quarters. So taking one quarter and comparing it the same with the other quarter does not give a true picture. It's 6 months versus 6 months. And when you see that, 352 crores has become 454 crores PBT. So very strong performance even in the bottom line. Net working capital development, the dark blue bars are accounts receivable, light blue bar is inventory, and the gray one at the bottom is accounts payable, and the line at the top, the gold yellow line, is the net working capital. So compared to the immediately previous 2 quarters, the working capital has gone up. And if you remember, in one of the last analyst call, I had said we need to preserve cash because we expect working capital to go up with operations going up significantly. And we wanted to finance that with internal accruals. And that we have been able to do here without borrowing from the banks. We have been able to finance it internally and keep the inventories and receivables low at a good measure. Compared to immediately previous quarter, it's a slight increase, but compared to March, you can see there's a 450 crores kind of an increase, and that has been financed internally. That's the big significant jump in net working capital, but all managed internally. Half year ended September 2024. This is the sales numbers. Agriculture Solution had a very good year last year, 6 months, 1,229 crores. That's you see at the bottom table. Compared to that, it's 1,400 crores, around 177 crores higher compared to last year. So already a very good performance like last year. Materials is a star performer, around 600 crores increase in sales. And here both our monomers division and performance material both have contributed to this top line. Industrial Solution top line has grown, but the bottom line is under pressure, so that we see in the next slide. But top line has grown by 237 crores, whereas Surface Technologies, where we have our coatings and catalyst, has around 100 crores less. But it's a very small business, so not significant in terms of creating any adverse impact. Nutrition and Care is up, and chemicals again is around 200 crores up. So overall, from 7,000 crores, we have grown to 8,200 crores, a 16% increase. Results, this is the PBT. Compared to 352 crores of last year, we have 454 crore. Again, Agriculture Solution had a difficult year with a higher input cost and change in product mix and all that. Put a lot of pressure on the bottom line, and we have come down by 61 crores. So a 310 crore was what we earned last year. Compared to that, it's around 249 crores this 6 months. Materials, like I said, is a very strong performer. From 15 crores, it has gone up to 110 crores, contributing 95 crores to the bottom line. Industrial Solutions, Surface Technology are marginally lower, but Nutrition and Care chemicals have contributed well. So overall, it's a very strong year for us, more than 100 crores of increase in PBT in the 6 months compared to same period last year. Coming to receivables, this is in number of days, 63 days. So as usual, we maintain receivables and inventory very strictly. And any increase is immediately looked upon and brought down. So 63 days receivable, especially when our terms are around 60 days, is not really a bad number to have. But still, there is scope to reduce it by a day or two, which we will be doing in the December quarter. It's ongoing work. Inventory is 60 days of inventory. Since we import a lot, almost 75–80% of our raw materials are imported, and merchandise is also imported. So all that is to be taken care, and hence we have a little higher inventory of 60 days. But then, in my opinion, that's a very good position to have, because we don't want to lose on any opportunities whenever the demand comes up. So we maintain that balance very well. The business units have done very well in that regard. Cash flow from operations, you are used to seeing our cash flow at positive 300, 400, 500 crores. But this time, because of the increase in the working capital requirement, because of increased operations, we have negative -8 crores of cash flow from operations. Yep. Operating expenses, this is all expenses other than COGS, cost of goods sold. Other than cost of goods sold, all expenses, despite being an inflationary environment, we have brought it down by 0.2%. It's 11.5%. So very well controlled fixed cost situation. EBIT before special item is 5.6%, again, better than last year, same period. And ROCE is a strong 14.3%. Worth highlighting is this is not annualized. This is ROCE is for the 6 months, so 14.3%, not annualized. Similarly, just to see what would be the situation if we exclude the surplus cash and if we exclude the interest received on that surplus cash, return on net operating results. It is 18.6%. So we keep track of that also, so that only the interest income does not change the scenario, and we should not be misled there. So ROCE, as usual, calculation is 14.3%, but return on net operating assets is 18.6%, 4% more than last year. EBIT before special item, again, all the three are not annualized: ROCE, RONOA, and EPS before exceptional item. All three are not annualized. Very strong 78 rupees per share as compared to 60 rupees last year. So overall, very strong performance for the 6 months. And let's see how the next period continues.
Yeah.
I hand over to Alex for the next updates.
Thank you, Naren. And again, also from my side here, a big shout out to the entire teams, to all the businesses, all the sites, all the service units for the 6-month very strong performance. We continue our profitable growth momentum, and it's very visible. And at the same time, also, we continue to observe and monitor and keep under control also our costing and our working capital. Now, like always, a few updates. These are not all encompassing. We have many more examples, but just to give you a little bit of a flavor, what has happened since the last analyst conference. So last time I showed a picture which was still a building under construction. So here you see the final building. So we continue to strengthen our development capabilities. This is a polyurethane technical development center in Mumbai, where we have a state-of-the-art equipment. It's 2,000 square meters. And these are technologies that we can showcase to our customers. We can troubleshoot, we can train, and we can also provide customized solutions here. And some of our customers have already visited this lab and have been very, very impressed. This is catering to many different industries. I mean, construction industry, transportation industry, footwear industry, furniture industry, appliance industry. So it's a very nice addition to our capabilities, and it's in Thane, at our Thane site in Mumbai. We also continue to expand our production capacity. So on the left-hand side, we are increasing our polyamide compounding capacities by 40%, both in Panoli and Thane. And this is also catering to our performance materials division, which has had a very strong growth momentum, and we're expanding our assets here. On the right-hand side, we're also tapping into new business opportunities. So there you see the construction of an alkaline surfactant polymer blending plant at our Dahej site in Gujarat, which is intended for enhanced oil recovery. So mature oil wells will be able to have better oil recovery with our applications. And this is a new business, will be a new business for us. We continue to deepen our connect also with industry and associations. So on the left-hand side, you see our participation in the Petrochem conference. On the right-hand side, India Chem Expo. India actually hosted this year the Asia Pacific Conference of German Businesses on end of October in Delhi. where also the Honorable Prime Minister Modi attended and addressed the delegation, and also our Chancellor from Germany, Olaf Scholz, addressed the delegation, and our group CEO, Markus Kamit, came to India. So also strengthening the ties between India and Germany. We intensify our engagement with key customers. Automotive segment is 15 to 20% of our business in BASF India Limited. And you see here Mahindra, Tata, Hyundai, and also a battery show that the team hosted the beginning of October. All very, very important engagements with key customers in the automotive segment, which also translates into recognitions. Here, we have been awarded by Tata Motors an award for innovation and technology excellence for the successful launch of our high solids technology at the Sanand plant, reducing volatile organic components emissions by about 35%. So adding from a sustainability perspective, reducing also our solvents in this technology. So a nice recognition from a key customer like Tata. We continue to do outreach also in the communities we serve. As you know, BASF Kids Lab, we started last year to inspire kids to become climate champions coming from underprivileged backgrounds. We started in Mumbai, then transitioned to Mangalore. And here you see a picture of Bangalore, where more than 2,000 children went through a Kids Lab, getting them closer to chemistry, excited about chemistry, and preparing the new generations to come into the chemical industry, hopefully. So altogether, we can say between Mumbai, Mangalore, and Bangalore, we've inspired more than 4,500 kids in the last year. We also support water-stressed areas. And here's an example in Maharashtra, in 3 villages, where we actually created this canal that you see on the right-hand side, making sure that water is conserved and then deployed to the agricultural fields next to it. And this enables actually to increase the livelihoods of 5,000 families in these 3 villages, and also enable the farmers to sow a second crop. These are also part of our CSR initiatives. We also partner with academia and industry to upskill and promote diversity and inclusion in the chemical industry. We have to make the chemical industry more attractive also to female talents. And I'm happy to share that this is now the second batch of this program recently graduated, and actually the third batch already started. And with all 3 batches, more than 130 graduates, bachelors and masters of science of chemistry, females, coming from underprivileged backgrounds, went through this program. And the majority of the first and second batch were placed in the industry, in the chemical industry, either through internships or full-time employment. So very happy to see that we're also, together with the industry, together with key academic institutions like Somaya University in this case, increasing the diversity in the chemical industry. We also recently moved to our new office. Actually, we're here today hosting this analyst conference from our new office at Godrej 1 in Vikhroli. This is a state-of-the-art future of work office, which really enables stronger collaboration, more creativity, more connectedness, and also stronger motivation of the teams, and also being an attractive employer for future generations. With that, I would like to close by mentioning our focus areas. So one, on the left-hand side, we have to first and foremost maintain and continue our very strong safety track record. Second, we have to continue to sustain our profitable growth, maintain a high asset utilization, and improve our margin management. And with that, also control our working capital, as Naren has described. We continue to drive sustainability measures across all sites and in the country. When it comes to external stakeholder engagement, we will continue to intensify our engagement with key business partners, be it customers, but also suppliers, and drive a strong voice in the industry, also when it comes to advocacy efforts. And we'll continue to do community outreach also around our CSR initiatives. And we want to be a strong employer of choice, yeah, and focus also on our people. I mentioned one example is our new office, yeah, which increases motivation. We have to fortify our talent pipeline and promote diversity and inclusion, as mentioned with the WeShimi example. So with that, I want to thank you all for your attention. Thank you, Naren, as well, and Manohar and Anil. And we're opening it up for questions. Looking forward to it.
Thanks, Alex. Thanks, Naren. I would request all our speakers online, if there are any questions, you can post it in the chat, or you can raise your hand and we will definitely give you an opportunity to speak and ask your questions. We already have the first speaker, is Rohit Nagraj from Centrum Broking.
Hello, Rohit.
Hi, good afternoon. I hope I am audible.
Yes, very well, please. Go ahead.
Thank you so much. Thanks for the opportunity. So first question is on the agrochemical segment. We've seen that the last couple of years, Exponus has been doing extremely well for us. And we launched Epicon during the season. How has been the broader performance of both these products during the first half? And just to get a perspective on the overall industry, what is your thoughts in terms of the overall industry dynamics currently, and I mean, in terms of the inventories in the system and our inventories in the system? Thank you.
Thank you, Rohit, for that question. I hope I got you right. It's about Exponus, so the agricultural market and inventories there as well. First, I'm happy to share that our market share growth in the insecticide segment, which, as you know, is the largest segment when it comes to crop protection, around 50% of the market. Over the last few years since the launch of Exponus has been very, very solid. Yeah, we've been able to gain market share from almost close to zero to today almost close to 5%. Yeah, with Exponus, but then also, as you know, we have also launched Epicon and actually two more insecticides. Yeah, altogether 4 insecticide launches in the last 2 to 3 years has enabled us to make inroads in the most important segment, most important market, insecticides. What we see this season, and I've mentioned it a little bit on the macro slide, we have seen that especially in central India, western India, southern India, there has been excessive rains and extended monsoon, whereas in the north and east, it has been rather dry. Yeah, so it's been sort of a mixed picture this year in the country, and that has also led to less insecticide applications, yeah, especially in the central, western and southern part of India. Yeah, so that is felt when you look at the insecticide market, and obviously we have felt it as well. Yeah. Having said that, though, these additional rains have also led to a situation where most of the reservoirs, and we have more than 150 reservoirs in India, are quite well filled, yeah, above average. So when it comes to the Rabi season, I think reservoir levels are good. Moisture on the ground should be good, especially in those areas that received quite some rains. Yeah, so it's sort of, yes, there has been an impact on the insecticide market, but although we don't make forward-looking statements, I'm cautiously optimistic that going into the Rabi season now, moisture and reservoir levels are quite positive. Yeah, so that's a little bit on the overall context and our specific performance when it comes to insecticide development. Difficult to mention the channel inventory. I mean, I can't speak for our competitors. What I can tell you is that obviously we always have a very, very strong eye on the situation when it comes to working capital as well. And we feel confident that with the portfolio that we have, with the current Rabi expectations that we see, we'll continue to have a strong development also moving forward.
Sure. Thanks. That's really helpful. My second question is generally for the chemical industry. So how are we looking at from the China dumping perspective as of today in terms of the current situation? And a simultaneous question to that is from the pricing perspective, are the prices more or less bottomed out? And what could be the figures for the prices to go up, from your broader perspective? Thank you.
Yeah. Thank you for that question, Rohit. I mean, the Chinese situation, see, it's difficult to make predictions here as well. What we have observed is there hasn't been really a sustained significant recovery when it comes to consumption in China, right? I mean, people are saving more. I think the government in China is trying to support and stimulate the market. It remains to be seen if this stimulation is going to be a lasting and sustained effect in the market, but we have not really seen a substantial recovery in China, which then means that the overcapacities that have been built and continue to be built in China, those capacities somehow, and the volumes that are produced with those capacities have to end somewhere, right? So this is why it's very difficult to see that the pricing pressure, especially in the chemicals segment. I think we have seen the material segment, as also Naren explained. I mean, the material segment has done very well, both performance materials and monomers. But the chemical segment is still, especially when it comes to petrochemicals, under quite some pricing pressure. And I don't see this really improving substantially. Yeah, but I hope that the markets also in China will eventually pick up again. I mean, there is GDP growth in China, but it's not really to a level where it was before, and the market is still quite impacted by that. Yeah, but that's a bit my answer to that question.
Yeah. Thanks a lot for answering the question. All the best. I'll come back. Thank you.
Thanks, Rohit. The next speaker online is Anshum Nadecha from Bryanston Investments.
Am I audible now?
Yes, Anshum. Please go ahead.
Yeah. Hi, Alex. Hi, Manohar. Hi, Naren. I think it's great interacting with you over a period of time. I have few questions. The first one is on the agri side. So I missed initial 5 minutes of the presentation, so please pardon me if some of these questions you have already answered. But if I look at last 6 to 8 quarters, I mean, we have seen very significant improved margin for the agri segment, especially for the quarters which are seasonally strong quarters. And I think on the last call, you did mention that you continue to focus on profitability, steering better product mix, shifting from low margin products to new innovative products. Then again, you alluded to the insecticide segment, wherein you have had good launches, including Efficaon, Expunus, and Alexion. And you also said in the past that you have been very cautious in pushing inventory in the system due to erratic monsoons. Now, when I look at all these factors, and when I look at the seasonality, I think last 3-4 years, we have never seen a seasonally strong quarter report so significant downturns in margin. I mean, Q1 and Q2 are typically static in terms of margins on the agri side. And this year, it has been very different. I mean, Q1 and Q2 has been stark contrast in terms of margins. So I just wanted to understand what went wrong in this particular quarter so that you had a significant dent in the margin. And as I have asked in the past as well, how should we look at margins on the agri side in the near term and structurally in the medium term? So that's the first question.
Okay. Anshum, thanks a lot. And again, when you look at the agri performance, it's important to look a little bit over time, right? I understand that your specific question is now this most recent quarter, but I think, as also Naren said, you have to look at the performance over time. So if you look at 6-month performance and especially also over the years, I think the team has done very, very well to expand the portfolio, launch innovations, and as you also said, ensure the quality of the business being very, very solid and healthy as we expand also our market share in the country. Having said that, what we experience now in this last quarter is there was a product mix effect on the one hand side, but also higher input costs, and as mentioned, I think the expectation going into the season, was that would have a good monsoon, and what we realized is that the situation was sort of a mixed bag. Yeah, again, central, western, and southern India, very, very heavy rains, which led to the insecticide market sort of being impacted by that, and insecticide sprays 2 to 3 less insecticide sprays. And then a very dry north and east. Yeah, so obviously that has impacted also not only the market but also our situation when it comes to insecticides, and that's what you see reflected there. But having said that, I think and again, I don't make any predictions for the future, but I think the portfolio we have now with the insecticide launches we've had recently, with the fungicides that we have in the portfolio, with the herbicides we have in the portfolio, is very solid, is robust, is balanced, and we believe that we will continue to be able to have a very strong position in the market and continue to expand our market presence and share also moving forward. And that's in the focus, while at the same time, obviously, making sure that we continue a very, very heavy eye on our profitability and our working capital situation. Yeah, so that's what I would say, Anshum, to answer you.
And to add to what Alex said, Anshum, June was exceptionally good quarter, of course, but then September is not that bad a quarter. We had a PBT percentage of 12% for the September quarter. So if you take the 6 months together, 18% PBT for agro. So it has been a very good 6 months, very good season for us. Yes, not comparable to the June quarter, which was exceptionally good.
So again, 2 things, if I can ask in continuation of that particular question. You did allude to erratic monsoons and the impact, but when I look at the sales number on the agri side, sales numbers have been very strong, right? So if I would have actually, had it been that kind of a thing, logically to me, sales would have been little lower. But again, I'm not questioning, you've done a great job with margins. Just the volatility in last 2 quarters, and when I look at last 5-6 quarters, the profitability has been generally higher. So, 24-12, 50% drop in profitability for a seasonally strong quarter is something which I could not understand. While I got your points, but still, if I do my math, any business for the kind of business that you guys do in agri, those things probably, don't answer most of the part. Why should it happen that way? Sorry for the repetition, but
it's a valid question. April, September 2023, the last 6 months, 6 months of last year, the margin was around, PBT was around 25%. As compared to that, now it is 18%. So there is a 6 percentage point drop in the PBT percentage for agro. So that's a correct observation. But what I'm saying is also that 18% is not a small number. Yeah, it is a very strong performance, and the business unit has done very well. At the top line, we have maintained, but like Alex said, the input costs have also gone up. There's a product mix issue also. All that put together, slightly lower profitability. But your observation is correct, Anshu.
So to take it forward then a little bit, structurally, where do we see margins? Is 24% a better band or 18% more sustainable band? How should we look at agri margins in medium term? I'm not talking about 1 or 2 quarters, right? If I take, say, FY26, if I look at FY27, or sustainable margins, where do we stand on agri side?
Anshum, it's difficult to answer. If we can predict also weather patterns, I think we will not be sitting here. What I can tell you is if the insecticide market, continues to develop, I mean, we will continue to participate there. And on average, also, it's a higher profitability that we generate when insecticides are strong, given our innovations that we have launched. It's difficult, and again, we don't make forward-looking statements here, but we have a clear ask also to the teams, and our ambition is obviously to continue to grow profitably. And that's going to be our focus area.
Okay, fair enough. So again, on the second question related to agri, if you could help us understand a little bit about our product pipeline, which is there in agri segment, probably for the forthcoming year, and how do we see it? I mean, we have launched 2-3 very differentiated products in a year, last few years. So directionally, do we see similar kind of product pipeline on the agri side in terms of new product launches? And again, in this context, how would be our new product contribution to our top line probably this year, and how do we expect it to be going forward?
Also there, Anshum, sorry that I cannot, do forward-looking statements here, but what I can tell you is the product pipeline is strong on all fronts. I mean, the innovation power that we've had in the agro division remains there. And rice, for example, is a very important crop also from an insecticide perspective. I can tell you there will be a portfolio enhancement in that segment as well in the next few years. So we'll continue to expand our portfolio and formulations and uses in the agricultural segment, not only in insecticides, but in all indications. So that will certainly continue. When it comes to, I mean, our ambition is to continue to grow our market share and our presence in the country. I mean, we are now, I mentioned, around 5% market share in insecticides. Overall, we're between 7% and 8% market share. So obviously, there's still headroom for us to continue to expand our market share in agriculture. So that is our ambition. That's the ambition of the team, while at the same time keeping a healthy, sustainable and profitable development as well. So that's as much as I can say, Anshum.
Yeah, thank you. I think that was great. Another question which is related to broader strategy, it also pertains to agri. So we spoke about BASF looking to steer agri segment, differentiated steering for the agri business solutions, so as to enable us to compete against the pure plays like Syngenta, Bayer, etc. Now, last quarter, if I understand correctly, parent is talking about listing agri business separately at probably parent level. So how it is likely to play out at the Indian entity level? What will be the timelines if the same is to be done for the Indian entity? If you could throw some light on this. And again, this is directional question. It is not something that I want you to forecast something about. Directionally, how do we look at what happens to this segment?
Yeah, Anshum, thanks a lot for that question, and you've been very observant of our announcements. I mean, we have announced a new strategy at end of September globally. Where correctly, as you mentioned, differentiated steering is one element, and AP, the agricultural division, is also part of it. Since, as you also said, we're competing in that segment more against pure play companies, be it Bayer Crop Science, Syngenta, FMC, UPL, Corteva. So we have to be competitive with that business against all these pure plays. So which is a good thing that we are allowing the business increasingly to be differentiated, meaning having different sets of KPIs, different resource allocation based on the needs. And also potentially a different ERP system moving forward. So this is all part of the differentiated steering project. Too early for me, Anshum, at this point to say concretely how it will look like in BASF India Limited. I think we're working on that together with the headquarter on making sure that we take the right decisions here for the business, for our shareholders. And this is as much as I can say today.
Okay, okay, fair enough. The next question is again at the broader strategy level. Last year, around the same time, you spoke about a significant increase in activity level in terms of visit at the highest level from the parent to Indian entity. And there was an expectation that it should result in some meaningful or business opportunities for Indian entity over a period of time. But at the same time, if I look at last 6 months, there has been change in strategy from the parent side. They have reduced the capex guidance significantly, which was there earlier in the past, and the KPIs have also shifted significantly in terms of a mix of ROCs, profitability, and sales growth. So, given the interplays and the potentialities of opportunity, especially on the electronics, electrification, and renewable sides in India, where do we see meaningful opportunity to the Indian entity to drive capex, say, in next 3 to 5 years?
Yeah, Anshul, thanks a lot, and you're very observant as well. That's excellent. So a few points here. One is, I mean, we have been investing, and I mentioned also some example. We continue to invest in capex on the ground in India, be it our performance materials division, be it our dispersion division. Multiple examples that we also shared today. So capex investments continue to happen already now. Now, when it comes to our strategic direction, you might also have observed that what we see in the next 10 years, 80% of the chemical market growth in the next 10 years will come from 7 countries. All 7 countries are in Asia. One of them being India, a very strong one. So if you have observed, we have globally identified, the BASF Group has globally identified India as an advanced country. What does that mean? That means that our expectation is to grow above market in India and to increase also our manufacturing and R&D capabilities in the country. So Asia, and specifically also India, will certainly benefit long-term from the group companies' focus and direction moving forward. So that's, I think, a positive signal, and it's another star that is aligning on, I always said, and I've mentioned this before, the stars are aligning for India and also for BASF in India. Now, some of these, what I can tell you is we have some projects under development, but these take time to ripe and to mature, right? I mean, we don't, especially potentially larger investments, we have to do the right investment at the right time, at the right location, with the right business case, and this takes time to mature within and to ripe within the country, within the business and company. So this is as much as I can say. We have a clear expectation of BASF growth in India in the next 10 to 15 years. We have some interesting projects that we're working on, but too early to announce anything here because we're working on it. Yeah, so that's as much as I can say.
Okay. Last 2 questions from my side. One is regarding your intercorporate deposits that we have placed with BASF Catalyst, BASF Chemicals, and some of the other entities of the parent, and it's a significant amount. Given that we would be generating about 800,000 crores of OCF on an annualized basis, just wanted to understand the broader thoughts around capital allocation priorities, because our business typically generates around 25% ROCE, and giving this money to parent entities, even though they're group entities at 7.5%, not sure that's the best thing to do. So if you could just share your thoughts around the capital allocation and the necessity for this particular thing.
Thanks, Anshul. Yeah, you're right. We have this intercorporate deposits to the group companies in India, but the intention is not to kind of finance them. The intention is to deploy our surplus funds in the most productive manner so that we get better than what we get if we had placed it in a fixed deposit with the bank. Because these are short-term loans, right? I mean, this is not for 10 years. Till we have an opportunity to deploy it, we want it to be kept somewhere safe. And as soon as we need the funds, it should be available. So these are kind of 3-month deposits, which gets renewed on a periodical basis. So the situation today is we have some surplus funds and it has been placed with the entities. The moment we need that, we take the money back and then deploy it. One example is the working capital situation, which I described. Both receivables and inventory went up with the increase in operations, and we could finance it from our internal cash generation. We did not have to go to the bank because we just reduced the ICDs to the group companies and placed it with and financed the working capital. So that way
again,
it has been done.
the limited point which I want to make is, see, typically we have some surplus cash. We'll be generating a good amount of cash. I mean, we have been generating, and I don't see any reason why we can't generate 800,000 crores of cash each year from the business, right? And we have certain capex plans that we have disclosed, right? And that is the amount of typical capex that we do. And if I net this off, right, logically then the dividend should go up, or there should be significant growth opportunities that we should be talking about, right? So I think that is the bigger question to me in terms of capital allocation. I mean, how do you use surplus cash, which is on the treasury side, is your discretion. And I mean, it will be wrong on my part to point towards that. But my broader question is towards capital allocation, given the nature of the business, the cash flows, and our capex plans.
Yes. Whenever the capex comes up and there's a need for cash, this is the cash that will be deployed. But I understand your point. I agree with that.
Yeah, and just to complement, I mean, you saw also our working capital situation in our operating cash flow situation that also Naren described on one of the slides, right? So when it comes to inventories, when it comes to accounts receivables, we are in growth mode, right? So we are growing 16% in the 6-month view. We want to continue to enable the company and the businesses to grow, and that's why the deployment of having sufficient funds also to manage working capital is key. Besides capex, obviously.
Okay, fair enough. I mean, it doesn't answer my questions, but it gives me a certain perspective for sure. A last question, and then I have a couple of suggestions. So it is too premature at this point in time, but there are enough indications that we might see significant tariffs from US targeted at imports from China and other countries, including India. We also have a situation in China wherein there are surplus capacities, and those things probably fail to die down in terms of dumping. And incrementally, when you take a 5 years view, I think there could be some challenges there. So again, this US thing doesn't impact us directly, but it can have impact on market pricing, both on RM and on the finished goods side at the international level. While some of the changes can be transitory for us in terms of price adjustments and inventory, there could be some cases wherein it can be potentially little more structural impacts, which could be there on the product side, making certain products or FGs little unsustainable. Are there any segments in our business which potentially can get adversely impacted, are vulnerable, or is it too premature to be asking such a question? I mean, how do you as a management react to some of those things which are going around?
Yeah, thank you, Anshum, for that question. I mean, it's very difficult to predict what might happen with Trump, being the president-elect now in the US and taking office next year. I think the India-US ties have been very strong. I always look at the fundamentals of the market in India, right? I mean, you have the largest population and aspiring population. 2/3 of GDP is domestic consumption. I think the domestic consumption will continue to rise, which is always what we look at, right? Because if we are locally present in India, or active in India for more than 130 years, incorporated since the last 80 years, we are catering to the local demand in the country, right? And I think this will remain robust also moving forward. The situation and the potential, as you mentioned, the potential higher tariffs against China with the China +1. could actually be beneficial, yeah, for India as well, moving forward. Yeah, so I think there's probably positives and there's probably potentially negatives. Yeah, it's very difficult to predict this, but I remain convinced about the robustness of the consumption for the next 10, 20 years. I think this is India's time, yeah. Added to that also a political stability and continuity and confidence and trust, which will certainly also influence a foreign direct investment in India, and with China plus one anyway. So what I'm trying to say is I'm quite confident in the future of India, and we look at always when we look at long term. Yeah, Trump will be president for 4 years. Yeah, so we look at long term. So our strategic imperatives remain intact for the long run, and India specifically.
Okay, fair enough. Just a couple of suggestions. I mean, one thing which I have also spoken about in the past is, I mean, post-COVID, we have kind of also had hybrid meetings. But I mean, ever since you have been there, we've just had virtual meetings. And this is something I requested last time as well, that we can have physical interactions. Those are much better. That gives a better perspective. We can have little elongated discussions as well on certain things. So again, a request that just keeping it on a virtual mode continuously. I think that's a bigger thing. Second is on the guidance side. I mean, this is again something I have requested in the past. Parent has been very proactive in giving guidance, and they have been doing it over years. And at Indian entity level, we have not been doing it. So again, a request that given the nature and complexity of the business, you understand the nuances of the business much better than we can understand. So I think that is one thing. If you can do, it will be very helpful for some of us who are probably invested and keep tracking BASF India.
Thanks, Anshul. We acknowledge your comments. Yeah, thank you. Thanks.
And last thing is, I just wanted to understand how long you are there, Alex. You have done phenomenally well. So we want you to be there for a longer term. Just a little bit of understanding about your term here.
See, I've learned in all the years to not make any predictions for the future, but I can tell you thank you for your comments, and I'm very happy to be here. I'm also staying here for a while, Anshul, so there's no plans for me changing for now. But you never know in the future, right? As long as we continue to do well, I hope that I can also stay here.
Okay. Thank you so much. You guys have done a great job, and I hope to see you sometime and meet in person for sure.
Thank you, Anshul.
Thanks. Thank you.
There is a hand raised by Rohit.
Yeah, thanks for the follow-up. Just 2 questions. So one is, again, unfortunately, hopping on the agricultural solutions part. So you mentioned that we had challenges in terms of the raw materials and product mix. Was there any challenge even from the pricing front on some of the products, and that has also led to an impact on the overall margins for the segment? Thank you.
I think I just repeat, Rohit, it's a mixed situation. So one is product mix, and second is higher input costs, specifically affecting us in this last quarter. But if you look at it again, a longer term perspective, and also year-over-year development, we've done quite well, yeah. And I'm very confident of the performance of the team also moving forward.
Yeah, my question was specific to any pricing pressure because of the competition, and that has also led to some impacts on the margins.
Well, yes, I mean, especially if you look at topramazone, which is one of our blockbuster herbicides, right, Tinzer, there has been more generic competition coming into the market, yeah. So we've definitely seen that also and felt that, yeah. At the same time, we also have a very robust strategy here, and going also into mixture products that have been quite successful. So So the team has the right strategy here also to counter generic pressure. But yes, we have seen generic pressure coming in, especially on the herbicide segment.
Sales has grown by around 14%, mostly supported by volumes. So what you said is right. There is some pricing pressure, and that has reduced the overall volume growth is good.
Yeah, that answers the question. The second question is that you've also mentioned that for the next decade, we are looking at India as an investment destination as far as Asia is concerned, apart from the other 6 countries. And we've seen that in China, BASF has been very active in terms of the urban site and almost $10 billion investment plan till 2030. So are there any plans from the parent, similar plans of, significantly higher investments in coming years? And second, would all those investments be flown through the listed entities, or they'll be thrown to maybe some other vehicles? Thank you.
Well, thanks for the question. So first on China, I mean, more than 60% of the chemical market globally is in China today, right? So as a leading chemical company globally, we need to be present in China. In fact, if you look at our sales so far, our sales dependence on China has been 15%, 1.5, where 60% of the market, but only 15% of our sales is there. From a global perspective, right? So we're actually underrepresented in China. Even the big investment that you mentioned, that we're doing in China, will get the 15% maybe to 20-25%. So we're still going to be sort of underrepresented based on the market size. Yeah, in China, just to put it in perspective, is 15 times larger than India, right? India today is 3% of the global market, and also around 3% of our BASF global sales. Yeah. Having said that, I strongly believe in the next 10 to 20 years, I mean, the chemical market size in India the growth will certainly outpace many other larger countries for sure. And also our ambition, as I mentioned before, to grow above the market is clearly there. Yeah. So I think we will benefit definitely from the growth that is expected coming here. Now that was one part of the question. What was
the other one was for the investments. Where would this fall in which entity?
I mean, Rohit, when we look at from a company perspective, we look at our presence in India overall. Yeah, today, as you know, we have 5 legal entities in India. The flagship legal entity being BASF India Limited. Yeah, and I think BASF India Limited will still be there. Yeah, always, and a very, very important element in our presence as a company in the country. And as Naren was showing, when you look at our 6 segments, all key segments are represented in BASF India Limited. Yeah, so I'm very confident that BIL will continue to benefit strongly from any activities and intensifications that we will do as a company in India. Yeah, but it's I cannot answer at this point in time because also some of the projects that we are looking at are very early stage evaluations. Yeah, so there is nothing decided yet, and that's why I also cannot comment on how it will impact our legal entity structure in the country.
Thanks for answering the questions, and hope to see you and interact you in person in the future. Thank you.
Thank you, Rohit.
Thanks. Thank you, Rohit. Is there anyone else who has a question or any comment to ask? Okay. So that not being the case, I think thanks for all your questions and for patient listening to us. And I wish you a very nice evening, and thank you for your attendance and participation today.
Thank you, everybody. Looking forward to the next session.
Thank you very much.
Thanks, all. Bye.
Bye.